Retail earnings out this week that are telling us a little bit more about the consumer. Before the bell this morning, we heard from Target ending the trading day up nearly 3%. Now the move higher on the profit beat, but ultimately the retailer slashing its full year profit outlook, warning about economic conditions, rising interest rates, and uncertainty from the restart of student loan repayments here. And then on the other hand, we also heard from TJ Maxx, the shares there closing up just about 4%. A very strong report from this company, much stronger than the street was looking for. Full year outlook also being raised here to the upside, posting an annual sales jump, also a double-digit rise in profits here. So, Akiko, we talk a lot about the consumer, the fact that the consumer has remained so resilient in both of these earnings calls here from Target and from TJX, the parent company of TJ Maxx and Marshalls there. They were optimistic, but they did say that the next couple of months could be a bit challenging, given the fact that some people are pushing off some of their discretionary purchases.
Yeah, I mean, you hate to pit two companies against each other, but those are two diverging stories right there you just presented. I mean, Target, yes, still offers value, but they are seeing consumers pulling back from discretionary spending. You look at a name like TJX with stores like TJ Maxx, Marshalls, Home Goods. I mean, that is where the discounts are. And we are seeing traffic up there in all of the company's divisions. That points to where consumers are thinking. Yes, they're turning a little more cautious. They want to spend a little more, but they want value. And that's what this company offers. It's interesting. I'm going back to the conversation we've been having all week, Seana, really, as part of our retail special and our focus there. And what we have heard repeatedly is about the value play and consumers really seeking out those items, especially in discount stores. TJX right in the center of that. And that's why we saw a big pop in the stock today on the back of those strong results. Well, shares of Coinbase ending the trading day lower, down just about 0.2% there. The company says it secured approval to bring crypto futures to U.S. customers. And Seana, just a reminder, this comes as Coinbase faces off with the SEC, which has alleged that Coinbase has been trading unregistered securities. The company is saying that essentially this approval today does bring a little more regulatory clarity to the crypto space, but interesting to see the reaction on the back of that.
Yeah, it is interesting when you take a look into account the fact that the stock actually closed lower. There's still so much uncertainty around Coinbase, that regulatory picture. We talked time and time again about what the timeline looks like for that, when exactly we're going to get a little bit more clarity. And we've heard from a number of investors saying that right now it's too uncertain. It doesn't make sense to jump in here. But again, when you take a look at Coinbase, the approval here to sell crypto futures, and given the popularity on a global basis that we've seen in the derivatives market, you would think that it's obviously good news here for Coinbase. Let's also take a look at the world's second largest steel maker. ArcelorMittal here is reportedly considering a potential offer for U.S. steel. This is according to Reuters, and this coming amid a bidding war already underway for the company following offers from Cleveland-Cliffs, also from S-Mark. You're looking at shares of U.S. Steel closing up just over 1.5%. And we know, Akiko, that U.S. Steel has become the target of a couple of companies here, takeover target, following several quarters of declines here in terms of sales, in terms of revenue. I think it's too early to know, way too early, of how this is all going to play out and exactly who U.S. Steel is going to favor when it comes to some of these competing offers.
Yeah, too early to say, but at least we have seen a pop in the stock on the back of these multiple competing offers that have now come in. It's an interesting storyline that we've been talking about, Seana. I think worth repeating when you think about where the steel industry has gone. We've talked about just how few there are left here. Any kind of consolidation would limit that even further. At the same time, we have seen some strength coming through in steel on the back of those import tariffs that have come in that have essentially sort of pushed out, or at least kept at bay, Chinese companies that have really been dumping cheap steel there. So, we'll see how this all shakes down, but it certainly points to the transition that we are seeing within that industry.